Clients typically ask me if it's better for them to buy a resale property or a new launch property. The truth is that there is no fixed answer. Every client has his or her own unique requirements, and there is no one-size-fits-all approach. It will also depend on his or her own intention of purchase, whether it is for own stay or for investment. To explore this topic further, let's look at this case study together. In 2015, if you were looking to buy a property for investment, would you have chosen to buy the resale condo Compass Heights, which is above Sengkang MRT, or would you have chosen to buy High Park Residences, a new launch in Fernvale where you would need to take an LRT to reach Sengkang MRT? Bearing in mind that the average PSF in 2015 was 846 for Compass Heights versus 944 for High Park Residences, making High Park Residences approximately 12% more expensive than Compass Heights. If you chose Compass Heights, you're not alone. In fact, many of my clients would choose Compass Heights given the convenience brought about by its location. Moreover, it is cheaper and clients would be able to rent out the units for immediate rental income. However, let's look at the price performance for both properties from 2015 until now. If we look at the recent transactions for Compass Heights and High Park Residences, we will notice that the average PSF at Compass Heights is now 902, whereas High Park Residences has an average PSF of now 1368. Compass Heights has therefore seen a price increase of $56 per square foot, whereas High Park Residences has seen a price increase of $424 per square foot. Assuming a unit with a size of 1,000 square feet, that would mean a difference of a profit of $56,000 versus $424,000. However, we will also need to take into account the rental income for Compass Heights. Let's assume that we rented out the Compass Heights unit for $2,700 for 4 years while waiting for High Park to obtain TOP, and that maintenance fees are approximately $300 per month. Using those figures, we would have received a net rental income of approximately $115,000. Thus, the profits from the resale unit at Compass Heights would therefore work out to be $171,000 versus $424,000 for High Park. Do note that this assumes that there is no vacant period where the unit at Compass Heights is not tenanted and no repairs are needed at all during the tenancy. Unfortunately, this is seldom the case. Using the case study above, if you had bought a unit at Compass Heights for own stay, you would likely have to renovate the unit and would easily spend $50,000 on renovations alone. In such a scenario, you would also not have any rental income. Given the same period, your profits will work out to $6,000 if you had bought Compass Heights in 2015 and sold it today. In the same time period, if you had bought High Park Residences for own stay and rented Compass Heights for 4 years while waiting for High Park Residences to TOP, you would still make a profit of approximately $309,000 if you had sold your unit today. Looking at the case study above, it seems that if someone is buying a property strictly for investment and capital appreciation, then perhaps a new launch might be more suitable. On the other hand, if someone is buying a property strictly for own stay, perhaps for the purpose of using the property's address for primary school registration, and when there is no intention to sell the property for a profit in the short to medium term, then a resale property might be more suitable. If you have more questions regarding this topic, do feel free to reach out to me and I'll be happy to assist. If you have liked the content of this video, do consider subscribing and leaving a thumbs up.